My name is Emil Kalinowski. This is Eurodollar University, and you've reached the edge of shadow money. We've talked about it so many times. It's this undefinable measure of international currency that powers the global economy. I don't even think currency is the right term. It's hard to define, hard to identify, and yet we're going to be talking about one of the easiest measures, the simplest, most elementary ABC 1, 2, 3 measure the shadow money system, the US dollar. It started to rise recently. That sounds like a good thing. Is it? Jeff Snider, the head of global research, is going to tell us if that is the case. Good morning, Jeff. How are you?
I don't know. I'm good, Emil. Should we spoil it for the audience and tell them that the rising dollar may not be the greatest thing ever? Or it actually may be a bad thing?
Yes.
We'll leave it as a cliffhanger.
We're going to turn to an article that you wrote on the 30th of September at the Alhambra Investments blog, and it's called More Dollar Bull. And we're going to be talking about the present day US dollar increase, but that's not where you start out. You start out by going back in time to a similar moment in 2018. What happened in 2018? And then we'll talk about the similarities, the lessons learned then that maybe we can apply today.
I remember that early 2018 in particular, everybody was talking about inflation. Inflation was going to be a big problem. In fact, it was going to be such a big problem, the Federal Reserve under Janet Yellen and then Jay Powell early in 2018, they were going to have to become hawkish, which meant more aggressive in their rate hikes to head off inflation before it became too much, before it got out of control. So throughout early 2018, there was the combination of inflation and all of its implications, which included, up until that point, a falling dollar exchange value against most currencies. So you have rising inflation, falling dollar, and then, of course, the only mainstream critics of the Federal Reserve were those who said, yes, the dollar is going to fall much further and inflation is going to get much worse because we're critics of the Fed because the Fed has done too much. It's done too much money printing. It's gone overboard and the dollar is going to crash and inflation is going to go nuts and Treasury markets are going to explode and interest rates have nowhere to go but up. And that was really all you heard about in early 2018 was some level of inflation, either just enough or too much, some level of falling dollar, either gently falling, more good globally synchronized growth or crashing, and some level of interest rates have nowhere to go but up because of all of these things, inflation, growth, and all those expectations embedded in the Treasury market. But yet early in 2018, very early in 2018, and really there were warning signs in 2017, as we talked about not too long ago, but very early in 2018, suddenly the dollar, just the dollar exchange value, it stopped falling, even though, some data at that particular time, I think I referenced the PPI from February of 2018, which was hot, if not a little more than hot, which seemed to validate the case of inflation rather than something else is going to be our big problem moving forward in 2018.
I think you're underplaying it a little bit here because you're saying people were worried about inflation. The greenback was losing value. But if I remember correctly, that was the very first time that you applied the term inflation hysteria to what was happening. And then we're recently in inflation hysteria number 2. I'll talk about that in a second, but I'm going to read a quote here from Mr. Greg Anderson. Who is Greg Anderson? Well, he was the global head of foreign exchange strategy at BMO Capital Markets in New York. Maybe he still is, but here's what he said. I believe it was Valentine's Day, 2018. The dollar fell across the board. And here's his quote. Forex markets rotate from theme to theme all the time. The theme right now is global growth, and strong global growth has historically pushed the dollar lower. That makes sense. But it was bad timing.
As he was writing that Valentine's Day of 2018, as we said before, the dollar had already stopped falling and hadn't started quite rising yet. But the fact that it was sort of consolidating, you might say, at that time, along with some other financial indications in other markets, you started to get the impression that something was building, something different was building, something not inflationary, something not globally synchronized growth. We'd already gotten the warning signs throughout late 2017. And then all of a sudden, maybe a big one was the dollar no longer falling. And now we're starting to wonder, okay, what's really happening? And then, of course, within a matter of weeks, starting in mid-April of 2018, the dollar just started surging. It started rising precipitously, which caught everybody off guard because that wasn't supposed to happen. Remember, inflation growth some level of inflation, if not too much inflation, some level of growth, if not too much growth. That was the hysterical part of it. Everybody was convinced hawkishness, Federal Reserve policy going in that direction. It couldn't possibly be anything else.
Here's an example. I'm going to bring this up close to the screen. This is running hot. So here's the example of too much growth. The Economist, America's extraordinary economic gamble, and inside the hot rod, President Trump and Jay Powell, and there's thunder in the background. Now, on this
and that
side,
was, Emil, that was the February, I think the February 2018 edition. I mean, you couldn't have timed it better for them.
Now on the, I don't know what side the camera is, left or right. On the left or right is the Economist, and on the other side is our own illustrator who also illustrates for the Economist, David Parkins. And that's it. I just wanted to let people know that, yes, we have an Economist, the Economist illustrator on our team, although sometimes we send out different messages. Help me, Jeff. I'm losing my grip. Okay, so we're May 2018. In the first half of the year, the dollar is losing value because the Fed is
late 2017, the dollar's losing value. Early 2018, it stops, and then middle 2018, it starts to rise, and suddenly everybody's wondering what the hell's going on here. What could possibly make the dollar go up?
The Fed, because they're going to start tightening. It's turning
It's
hawkish.
always the Fed, right, Emil? It's everything is the dollar goes down because the Fed wants it to. The dollar goes up because the Fed's doing something. We're conditioned to this belief. We're taught from the very beginning that the Fed wants what it wants, and whatever it wants, it gets. And so if something happens, it must be because of something the Federal Reserve does. And that's just never the case. And this is, one of those microcosms where you can really see how people struggle to explain what should be really basic, intuitive stuff. Currency strategist you just quoted said, globally synchronized growth, strong growth, the dollar goes down. That's a correlation that's established throughout the first, especially the 21st century. Dollar went down before 2008 when global growth was at its apex. Then something different. So, I mean, but you would think that in the immediate converse there, if the dollar starts to go up, what does that say about growth? That seems pretty easy, right? If the dollar goes down, growth is good. Dollar goes up, it's the Fed. And that's really the point here, is that everybody tries to avoid making what is the simplest correlation decision, the simplest form of analysis, which is when the dollar goes up, if for nothing else, it correlates with only bad types of events, bad types of circumstances. So when the dollar started to go up in 2018, that was an alarm bell, something's not going right here. But yet in the mainstream, it was, oh, it's Jay Powell, it's the hawkish Fed. Yes, that's what's got to be bringing the dollar up.
Here's a quote from May 2018. The dollar, from the financial media, the dollar hit its highest level against a basket of currencies so far in 2018 as investors increased bets that rising interest rates in the United States would boost the greenback while traders unwound their bearish positions on the currency. Fast forward a month or so, now we're going to be quoting from the Financial Times and someone called Urjit Patel. You're going to tell us who this is and what it's all about. Dollar funding has evaporated, notably from sovereign debt markets. Emerging markets have witnessed a sharp reversal of foreign capital flows over the past 6 weeks, often exceeding $5 billion a week. As a result, emerging market bonds and currencies have fallen in value.
Yeah, those are the same 6 weeks, mid-May till June, when the dollar was surging the most in the quickest fashion. So it was going up, not just going up, but going up quickly. And that corresponded to what this guy, Mr. Patel, said, Dr. Patel, actually. What he said was, dollar funding has evaporated. And Dr. Patel wasn't just some academic or just some guy off the street. He was writing in the Financial Times of London as the head of the Reserve Bank of India. In other words, he was the leader of India's central bank. And what he was saying was, look, the world needs to pay attention here. The emerging markets in particular are having a dollar funding issue as the dollar goes up. In fact, what he was saying is the dollar funding has evaporated. And that's the reason why emerging market currencies are falling, which is the other side, obviously, of a rising dollar exchange value. What he attributed this dollar funding evaporated to was what a lot of other people had talked about in early 2018, which was The idea that the Federal Reserve was causing this dollar funding shortage through quantitative tightening, reducing its balance sheet, shrinking the level of bank reserves, as well as what had happened, the very thing that got the economists to paint Mr. Trump in the hot rod on their cover, which was the Tax Cut and Jobs Act of December 2017, which had the effect of boosting the deficit right away, which in dollar funding terms, or at least alleged dollar funding terms, had meant too many treasuries sloshing around the marketplace that dealers had to absorb, thereby disrupting repo markets. And this was what Urjit Patel was urging the world to understand, that something was causing dollar funding. He believed it was these mainstream ideas, which eventually proved to be inaccurate, in fact, completely wrong. So that's really the point here, though. We bring up Urjit Patel because what he's saying is the dollar goes up. It's not about interest rate differentials. It's not about, the Federal Reserve being hawkish. It's about dollar funding. Dollar funding goes the wrong way. It gets hard to come by. It becomes a real problem. We start to see that in various ways, including the dollar's exchange value going up. So dollar going up is not a good sign for pretty much anybody anywhere around the world, including the United States.
There's another way we can observe it. We can go to the Treasury International Capital Report and look at total purchases or sales of U.S. long-term domestic securities. And remind me, Jeff, these are treasuries. But looking at this graph, what we see is that it turned negative for the first time on this graph right during the Asian financial crisis, when the dollar was rising in value and the Southeast Asian nations and the Asian tigers needed to repay their foreign-based, dollar-based loans. That was very difficult, led off to a big socioeconomic crisis. And then we fast forward a couple of decades, 1 decade, 2 decades, June 2018. You highlight it here in red, you draw an arrow to it, exactly the same time that Mr. Patel was writing in the FT. We see it in the Treasury International Capital data. We see it. Yes, it's evaporating. It's difficult. And then now segueing to present day, you've highlighted in red a couple more bars, May 2021 and July 2021.
Yeah, let's go over the Treasury International Capital Report again. And as you're right, this is long-term treasuries, not just treasuries, but long-term U.S. dollar assets that are held by foreigners overseas. And what we see is that, or what the Treasury Department tells us is going on, is that when we see the dollar rise, when we hear about dollar funding becoming a problem, as in June 2018 with Urjit Patel, what we find in terms of the Treasury International Capital Report is that foreigners tend to buy fewer U.S. dollar assets, or in extreme cases, actually have to sell them on a net basis during any month. So it's not just coincidence that here we have the head of the Reserve Bank of India in June 2018 saying, hey, the dollar's going up in exchange value, which means dollar funding has evaporated, which further had meant foreigners across the entire world were actually outright selling their long-term dollar assets. And all of these things go back to this hidden shadow money system. What we can't see is what goes on in that hidden shadow money system. Therefore, what we're doing is putting together all of these things that we can observe in a comprehensive picture of what must be going on during those times, and what must not be going on during those times, and what must not have been going on during those times. That one in particular was inflation and globally synchronized growth. Those things were just, it wasn't just that they weren't happening, it was the opposite. We were turning into a globally synchronized downturn, and inflation had already become deflation. Okay, so that's what we're looking at as sort of a historical template that kind of fits a lot about, there's a lot of interesting comparisons between that point in time and the current day, as you just said, Emil, starting with the rising dollar and the tick data, which shows the same thing, and not just 1 month, but 2 out of the last 3, May and July of 2021, we see negative tick data. We see the dollar rising. We see all these other things that are telling us, yes, inflation. Everybody says inflation, too much inflation. It's getting red hot, when the global monetary system is saying, no, we may be turning the other way.
Exactly, the similarities that you said. And now to bring up to the audience so they can see it, I'm going to pull up a graph of the US dollar, zoomed in on more recent times, just to see how it started to rise. When did the rise begin?
The dollar stopped falling in January of 2021. So this is not like the dollar just started rising yesterday or last week. The dollar's been sort of sideways to higher all year. This entire year, we've heard nothing about inflation. Yet the dollar's exchange value, and not just against the euro, but across many different currencies, the dollar's exchange value is kind of hung in there. And then lately, over the last few months, since around middle of June, the dollar has gone up. And you're already starting to hear, like the middle of 2018, some noises about it. Why is the dollar going up when we have inflation, all this other stuff? And we're starting to hear, oh, it's tapering. The Fed's becoming hawkish again. It's got to be the Fed. It's going to be, there's rate hikes coming next year, interest rate differentials. All of the same kind of explanations that we heard 3 years ago are going to have already started to trickle out into the media, and they're going to more heavily come out, in more regular stories if the dollar continues to go upward. Because this is really the point here. Nobody ever learns from these things. These episodes repeat. What happened in 2018, we could easily have used 2014 and 2015 as an example, or 2010 and 2011. This kind of pattern repeats, and it repeats almost exactly the same way time and time again, yet nobody ever seems to be able to learn the lessons of these things, even though when you put all these pieces together and realize what people are actually saying, it really isn't that difficult. Emil, what you and I are doing, there's not a whole lot of rocket science here. We're really just putting together patterns and giving them sort of a historical background, really. But once you get out of the mindset that the Federal Reserve is a central bank and that it's the center of the universe, you really can start to read all of these symptoms and say, this isn't really difficult to tell what's going on here. The dollar goes up, dollar funding evaporates, and all of the negative consequences in the global economy that result from them, which are not inflationary nor growth.
Now, there's many different flavors of the US dollar. You show at least two of them here, right? There's the most popular one, the DXY, which I think is the worst because it's so heavily weighted with the euro and the yen. It's just not representative of all. But then you do include the broadly trade-weighted US dollar index, and there's can you
which
still
is still that even that one, the broad trade-weighted index, is still heavily influenced by the euro, which is sometimes why I like to include the broad trade-weighted index that focuses only on emerging markets, because for our purposes, as Dr. Patel was saying back in 2018, as the dollar was slamming into emerging market economies, those are kind of the ones that are most susceptible and exposed to dollar funding has evaporated. So if we see, what's going on in emerging market economies and emerging market currencies, that might give us a little bit better insight, maybe not so much colored and tainted by the euro.
And you can see this one, right, Jeff? The emerging market one I'm showing? Great. I never know with this screen share technology. All right, so here's one that's advanced economies. That one you see the dollar surging even harder, stronger than we see on the emerging markets graph a second ago. And then also the BIS provides it. Now, what we're looking at here is daily. The BIS does their own version, and it's monthly, so it's not as clear, but they have monthly real currency values adjusted for inflation, which is what I'm showing here. They do it narrowly and broadly. So here's a narrow, real US dollar. And then here is their version of a broad 60 economies. So that's much broader than what the Federal Reserve does, which I think is 24 or 27 different economies. Whatever flavor you choose of US dollar, we see a rise. And especially on the day of this article here was a really big rise. But Jeff, the biggest one, we're not, which currency is very heavily weighted, very important to the global system, and hasn't moved towards weakness against the US dollar is the Chinese yuan, Jeff. And that one
hasn't moved at all, really. And that's kind of what's, that's, as I said before, that's the one that kind of makes you cringe thinking, what the hell's going on here? Now, of course, this week, as we're talking, this is October 7th, China is in its Golden Week national holiday, so the markets are closed there. You never know how they're going to reopen, what kind of shape they're going to, or what they're going to do to global marketplace when they reopen. But over the last, almost 4 months now, 4 months, which is one of those things that proves this is not random. The Chinese yuan hasn't gone up, it hasn't gone down, it's kind of gone sideways. It's moved around a little bit, but still within a very narrow range, a suspiciously narrow range, as if it's being manipulated, which obviously it is being manipulated, which only brings more questions about why must it be manipulated? What's the purpose? What's the goal? Who's doing this? all of those types of questions, which again, going back to January of this year, this entire year, we've heard nothing except inflation, growth that's going to be excellent, if not too good. And yet the dollar is saying, wait a minute, hold up. Something's not right here. The entire year.
This episode is brought to you by Macropiece Theater, where I play the role of Alistair Cooke and I read around macroeconomics. And tomorrow's episode, I was trying to look it up. I think it's going to be episode 120. I'm going to be reading Maroon Macro from Substack. And Maroon Macro wrote about that he or she believes that they want to short the CNH, and they set out their case. Interesting that we're just talking about the Chinese currency. And then someone else I know recently took their red pen, someone who I think highly of, took their red pen, circled the CNY currency, and then put a question mark next to it. And they lifted their eyebrow like this, meaning, according to this person's methodology and system, they're looking at this currency. They're a little worried that maybe we may see what we have seen before, the artificiality that you described, that maybe, it's going to turn down like we saw in 2015. I feel like maybe I'm putting words in their mouth. I don't want to do that, but they raised their eyebrow in suspicion and question about the stability of the currency. To be determined. Jeff, that's it from me on this episode. Is there anything more that we want to talk about with the US dollar?
No, just basic stuff. US dollar funding evaporated, goes up. It's not interest rate differentials. It's not the Fed. And you can tell that because back in 2018, the dollar stayed up even as the Fed went into rate cuts. So as interest rates started to fall, the dollar didn't change direction. And in fact, it never does. It has nothing to do with the Federal Reserve at all. It's all about dollar funding has evaporated. And in 2021, this is, again, basic stuff. From the very beginning of this year, we've seen the dollar, first of all, stop falling, which was one of those, what's going on here, especially as supposedly the inflation case, or at least the mainstream view of the inflation case, has only gotten stronger. The dollar has continuously defied that inflation case. It's not about interest rate. It's not about taper. It's not about Fed rate hikes in 2022. In fact, as we've said before, all year, we've documented how it's one escalating thing after another, beginning in January. And I think, as the person you're going to read about with CNY and CNH is gotten into, the fact that now the Chinese government and the Chinese financial and monetary authorities over there are clearly intervening in the currency markets is one of those escalating warnings, which says something has gone on all year, and that something has reached an important point where Chinese authorities feel they must intervene in a way that they have done before. And then the way that they have done it before, you just referenced 2015, Emil, did not turn out very well for them, us, or anyone around the world. And that's really the lesson here. When the dollar goes up, it's not Fed policy, it's not, whatever, it's not interest rate differentials. It's nothing good because, as Urjit Patel said, dollar funding is evaporated, leads us to no place good.
In part 2 of this episode, we're going to talk about commodities. What are they telling us about the situation in the global economy? We're going to reference palladium, copper, lumber, iron ore. Woo! It's going to be a lot of fun. I can't wait. So stick around.